Well, expiry day volatility, you're watching closing trades right here on 80 now and a truncated week at that. So we're settling in around the 22,450 thereabout print for the Nifty futures. A failed attempt at actually clawing back and then got sold into pretty much around the session lows, one would have to say, on the brink of dipping below the 22,400 print for the Nifty spot right now. What are the pressure points? It's IT once again, led by Wipro today, which is down about 2%. There's Shriram Finance as well, Tata Motors, Hindalco. These are a couple of laggards in trade, as is the case with Bajaj Finance as well. On the flip side, not as much strength. The biggest gainer, I beg your pardon, is less than 1% higher. BEL, ICICI Bank, SBI, meager gains coming in there. And from what one can see, largely all sectors, including telecom, are still very much in the red. The breadth of the market, much unlike how we were in the first 1 hour of trade. From there, of course, it's reversed hands. Policy Bazaar is down about 5.6%. Bharat Forge is taking quite a bit of knock, 5.5% lower there. Sona Comstar down 3.25%. Voltas, Crompton, these are all laggards in trade. But yes, DMart and CAMS, along with Adani Green, those seem to be the star performers today. DMart is now sitting on a 4% gain, CAMS higher by 3%, and Adani Green as well higher by 2.5% as we speak right now. But Kunal, what's it looking like? Truncated week, so one anticipating any green in any case.
Yeah, and I think largely we are into a range when you look at the index. 100 points of the range for the index in the last 3 days. 22,500, 22,400. So that itself indicates that the market action has been more broad-based, individual stocks, etc. But the only concerning part about the market so far is that even though sectors are showing signs one-off days, for example, you had the real estate sectors doing pretty well, metal stocks did pretty well, one of the days. But then these stocks are lacking, or these sectors are lacking a major follow-through punch on the upside. That I believe could be a concern for a short-term move or a sustainable move for the index on the upside, which means that there could be a chance where the index may move up higher, but whether they're sustainable on the upside, that could be questionable.
Anshul Sehgal joined just now. Let's connect with him. Let's talk markets. Nuresh is also ready. Nuresh, it's an okay sort of a day, but is it largely because of FNO expiry?
Long weekend and hardly any volume action across the markets. So we are still stuck in this band. We are yet to see momentum, although we are not seeing the breadth weakening or seeing selling pressure. So any breakdowns also has not seen follow-up selling pressure. So for now, we are stuck in a range. And maybe next week, we again take a fresh view in terms of momentum. But for now, the same range, 22,200, 300, 22,800 on the upside.
Anshul bhai, kaise ho? Happy Holi.
Happy Holi, Nikunj bhai. बहुत बढ़िया. Time to rejoice.
Time to?
Rejoice, be happy.
Okay, now that's a spiritual and that's a fundamental part which we all need to focus on. Always time to rejoice, time to be happy. But if you're in the market, there's nothing to be happy about in last 3 months.
Warren Buffett makes a very interesting statement every time someone puts that question to him. He says that when you pay a very heavy price for a cheery consensus. What he means by that is that when everything is good, there is no uncertainty on the ground, the prices will show that. And when prices show that, I mean, we walk into a store where we are there to buy a shirt. And if the shirt is full price, we are not happy. We are happy when the shirt is half its price. The same thing happens in the markets and we are unhappy. So, that dichotomy is human psychology, really. It is really a time to rejoice for the discerning investor because prices have come off meaningfully. 6 months back, I wasn't happy because I didn't know what to do. There were no opportunities that one could say that these are cinches, that they are table thumping opportunities. Just go ahead and buy, put all your money in that opportunity and you'll make money. I find such opportunities today. And which is why I say that this is a time to rejoice.
Interesting that you say that, Anshul. Hi, afternoon. So where are those table thumping opportunities that you're identifying right now?
Afternoon, Aisha. Always a pleasure. Across the board. Of course, you could well say that banks prior to this correction were already cheap. by virtue of prices having gone nowhere, in many instances prices having corrected while the markets kept going up, banks have become even cheaper. And that I can tell you that you can throw a dart, pick a bank which is trading at between 5 and 10 times earnings. Banks which used to trade at 4, 5 times price to book today trade at under 2 times price to book. This sort of pricing is something that in hindsight, a year from now will look like quite an opportunity. But just that at this time, people are wary of investing, so they're not looking at this space. Aside from this, capital goods companies, I recall one company, one hot company, which everybody wanted to be in it, had rallied as much as 2.5, 3 times in the last year, is down 60%. Business hasn't been impaired. That company today no one wants to look at because the environment is like that. We feel that that is where there is opportunity. Look at even defense. In defense, from a net importer, this country is going to be a net exporter in the next few years. Not a net exporter, but definitely a large exporter. And also within the country, indigenization has taken pace meaningfully. Of course, prices were quite unattractive 6 months back. Prices have become attractive today. I find opportunity across the board, and there are ample opportunities to thump the desk and say that this stock can be 2x to 3x in the next 3 years. I don't know what the frequency of volatility will be in the next 3 months or 6 months, but the magnitude of upside in the next 3 years allows me to bear that volatility as a cost.
You spoke about 2 stocks I distinctly remember on the budget day. One was Tips, and the other one I think was Global Spirits. Do you still like those stocks?
You could find no reason not to like them. You look at their results. The results were for the third quarter very strong, particularly for Tips Industries. They reiterated their guidance. Now, these are, and the guidance again is very strong. And here, this is just a case in point. I'm not referring to this company as a buying or a selling opportunity, but just as a case study. Here is a case study where the stock has collected 30% on strong numbers, on guidance which has been reiterated. A company that does 350% ROIC. And cash rich, gives away most of its cash as dividend to shareholders. And because of the volatility, the stock is corrected. I see no reason why this company cannot be, if everything goes right, that is, that it cannot be much higher than where it trades today. Even on the other name that you took, they have a very attractive alcohol consumer business, which trades at nearly 100% ROCE. Now, that kind of an ROCE on scale, as much as 1,000 crore revenues, is quite rare in the Indian alcohol beverages space. And if you were to compare it to some of the peers, they trade at significantly premium valuations as compared to this company. It is a question of time when the market realizes that this valuation doesn't, this company doesn't deserve this valuation. And we anticipate that valuations will expand. The question is whether I have the patience to wait for that time or I don't. Do I get carried away by the frequency of volatility, or do I focus on the magnitude of upside? That determines whether I will stay invested, make money, or I won't.
You've been tracking the Alcobev charts as well, right? And you've always liked USL, Radico more importantly. What about Global Spirits? We don't track this one often.
Yeah, I think Global Spirits also, I remember in 2020, 2021 or 22 phase, there was a time when the stock had done, I think, almost 10x, if I'm not wrong, from 150, 170 levels, thereabouts towards 1500 or 1700 plus mark. That was the high for the stock in 21-22 for Global Spirits. But post that, I think the stock had actually gone to a time-wise consolidation. And I see this as a natural phenomena because, when stocks run up 10x in a very short span of time, they're bound to get into a time-wise consolidation. But the larger trend for these stocks, they generally tend to continue. we typically look out for a 30% to 40% retracement from the life highs for these stocks as a good point where these stocks find support for themselves. For example, from 1700 or 1500 levels thereabouts, the stock has found multiple supports at 750 to 800 mark. In fact, even currently the stock is placed almost closer to the 900 levels. And over the last 1 year, 2 years, the stock has been consolidating with the support of 800 plus thereabouts. So that itself indicates that the longer term charts is much more positive for the stock, and price wise I think it's at a very attractive juncture.
Okay, that's on global spirits. For now, we're going to take a very quick break. Come right back. We'll continue our discussion with Kunal, Naresh and Anshul.
All right, in conversation with our technical experts, and we want Anshul Sehgal on board to talk about market fundamentals. What's looking interesting here is the bank Nifty, which is popping right back up. Kunal, we were discussing this trade in the morning, sell IT, move to banks. Sell IT if you have, move to banks. Is that a logical and a sensible trade? Could it linger or could it last for another couple of days, a couple of weeks?
Yeah, so the longevity is the most important part. Technically, yes, this could be an interesting trade with large cap IT stocks, mid cap IT names. They could start to underperform. They've already done it over the last 1.5 odd month. And I think more interestingly, till November, December 2024, the IT index, many of the IT stocks were actually perched at multi-year, multi-month highs for themselves, whether it's large cap names like TCS, Infosys, even the mid cap names like Coforge, etc. But then in the last 2 months is where you've seen the sell-off being a lot more aggravated. Now, when you generally see this kind of a sell-off where an index gets into a correction of 20% in a span of the 2 or 3 months, we generally expect that this could be a multi-month, multi-quarter trend for that sector. Even though, of course, the first initial sell-off is quite hard, then the stocks consolidate, they go into a time-wise correction, but then the trend for these stocks still remains on the downside. I think a similar kind of a trend emerged for the IT stocks in 2021 end, 22 start, where I think from Jan 2022, many of these IT stocks in a matter of 2 or 3 months, they fell by 10-15%, and then post that we saw almost 1.5 odd year of underperformance for these IT for the IT index at large. I believe a very similar kind of a trend, maybe a bit shortened, not extending to the next 1.5 odd year, but I think potentially over the next 1 or 2 quarters, this could be a good trade where traders could look at switching from IT to banks.
Anshul, would you still be wary of IT, or do you think after this kind of hard fall that most IT stocks have had, it's time to buy once again?
Sure. I'm in middle of the road in IT. I don't think that I would be overly bullish and going out and buying with this sort of a correction. Mainly because valuations even today are not reasonable, and secondly there is that overhang of AI and ML on companies in the Indian space. Now, if you look at these same companies prior to COVID, they used to trade at just under 20 times price to earnings. Many of them were mid double digits, meaning 15, 16 times price to earnings. Now, even after the recent correction, these companies trade at anywhere from 25 to as much as 40, 45 times price to earnings, depending on which company we are speaking about. Now, that for single digit earnings growth doesn't look like a very attractive valuation to me. Of course, if you are looking to hide and you're looking for defensive sectors, maybe this is one because at least cash flows are going to remain consistent. But in terms of making returns, absolute returns, and outsized returns, I think this sector leaves very little room on the upside. So I'm actually on the sidelines, and I don't think that unless you want to hide, this is the space to be in.
But I'll just put a framework here, Anshul, which is that let's look at IT sector, large companies. If I say 10% growth, then I'm extremely charitable. It is 6 to 8% growth. I'm assuming that dollar will linger where it is. It's not going to be going towards 90 more, which means that currency interplay which they get of 3-4%, that may not be guaranteed for next year. Third, these stocks are trading at P multiples which are anywhere between 15 to 25, something which you also mentioned. So why should one buy a sector where P multiples are 15 to 25, growth is 5 to 7%, and this entire fear of disruption will just keep everyone at the bay. I mean, with banks I can see clarity, with a lot of other sectors I can see clarity. When there is no clarity, when growth is not there, when P multiples are high, why knock on the door where I know there is uncertainty?
I couldn't agree with you more, Nikul bhai. I think that I'm under no pressure to invest in one sector or one company, while I have the whole array of companies, more than 1,000 companies to look for, and there are ample long-term growth opportunities within the country. Now, let me give you an instance. In 2017, in our portfolios, we bought a company called APL Apollo Tubes. And at that time, the company had revenues of 4,000 crores. It had a 50% market share or 40% market share in the industry, which meant that the industry itself was 10,000 crores. Fast forward to 2024, and the company's revenues are 20,000 crores, means 5x. And the industry size is 40,000 crores, meaning 3x, 3 to 4x. Now, essentially, because the industry size itself exploded, this company, being the leader in the sector, actually gained disproportionately. And that also reflected in their valuation. Stock went up 10 times. Now, this is the play in India, that many a sector, by virtue of how the Indian consumer is positioned today, is going to be multiples of where it is today. Meaning a sector which has 2,000 crore of total sector size could well be 10,000 crores 3-4 years out. And as a result, growth in companies within that sector will be tremendous. If I'm getting that, why should I go out and look for companies which are offering 6-8% revenue growth and minor profitability growth, and my investment thesis banks on currency depreciation? That's not a space that I would like to be when I have so many opportunities which are so lucrative in the Indian markets, listed Indian markets.
Okay, that's the take coming in on IT, and well, pretty much in a void right now. Of course, if it's part of your core holding or core portfolio holding, that is, continue staying put with those names. DMart, that really is the story today, and that's really the eye-catching stock. Naresh, how's it looking at the charts at 3,800 thereabouts?
So it's taken a bounce from that 3,300 mark, which has been the low for the stock for the last almost 3 years. 2022, 2023, as well as in 2024-25 now. So we've taken a bounce, but 4,100 has been a stiff resistance for the last 3 to 6 months. So I would expect over that area, there should be resistance, and we again drift lower and be in this band. So closer to 4,000, 4,100, you want to be looking at the short trade. For current levels, there is no risk reward to trade on either side.
We come back, last half an hour of trade for the day, for the week, and for the weekly expiry as well. But for the moment, I think it appears that we've slipped quite a bit from the day's high. The momentum, what we thought would come back in the second half of the trade, or which has come back in last 2 days when markets have started higher, they've gone lower and they've recovered in the last 10-15 minutes of trade. At least it appears that today that late hurrah seems to be clearly missing.
Followed about 176 points from the session peak right now, although the peak didn't last too long. It was just in the first half of today's trading session. Like we've been saying, it's Oil India, Adani Green, Solar Industries, CAMS, DMart. These are all the names which are holding high. And then BEL has sprung up once again. We should bring up the intraday graph of that stock. Consistent order wins, and it's a 1.5% uptick that you're seeing on this stock once again in trade. Anshul, you were talking about as to how you like the entire CapEx, manufacturing, defense themes once again. We were just debating earlier in the day in Kunjanai that, while the order inflows are coming in, whether or not the orders are getting executed, and more importantly, how long is it actually taking to execute those orders? Isn't that a consideration for you?
Definitely, Aisha. There has been in the last 8 to 9 months a slowdown in both in order activity as well as in order execution for a variety of reasons. But if you look at the bigger picture, say go back to 2011-12 and see how the evolution of capex in this country has taken place since then. In fact, as back as 2004. If you go back to 2004, our gross capital formation was somewhere in the region of 33%. That bottomed out sometime in 2018 to around 26-27%. And we have risen only to about 29% in a rising economy. In the economy size itself has become far larger in the last 20 years. Now, this number, if it goes back to the previous highs, then there is significant room for capacity creation in this country. And particularly that decade of 2011 to 21 was a lost decade on capital creation within the country. Much of that backlog has to come forth in the coming few years. So if I look beyond the coming or the last say 3-4 quarters and the coming 2-3 quarters, and I look at the next 5-10 years, manufacturing in this country, capital creation in this country is going to be significantly higher than where we are. And as a result, if I'm not a near-term investor and I'm investing for that trend to play out, I think I'm on a rising tide. And I think that rising tide will not only give me profitability in the businesses, but it will offer me upsides on stock prices. So that's the framework that I have. And I can tell you that, of course, there are expensive companies still in this space, but there are a number of quality companies which are reasonably priced also, if you look beyond the surface.
Anshul bhai, happy Holi again, and thank you so very much for joining us. I'm just going to shift to the markets and see if there is any other interesting trend. And it's not a trend. I mean, just like, we're taking it slightly easy. 73,000 in a sense on the index, I think, is where this market seems to be finding some taker. But we are really above that red line, so to speak, if I may use that word, 22,800, 21,800. At least from there, I think the market has come up quite a bit. Ajay Bagga joins us. Ajay, nice to have you back. What do you make of the current market setup? The selling in US market this week has been quite acute.
Yeah, I think the shift is starting out of the US back into emerging markets. Chinese markets have outperformed. Hang Seng is up 18% since the day of Trump election. So clearly, reallocation will happen back into emerging markets. India will benefit from that. China is right now a strong beneficiary, and we are seeing the global brokerages putting out buy calls on India. I think that is a big change. Domestically, Nikunj, I think we have made a turn. September was probably the cyclical economic down point, and December was cyclically probably the earnings, corporate earnings lowest point. And since then, we are seeing a big reversal. RBI has moved quite strongly on liquidity, on macro-prudential easing, as well as on rate cuts. Now we expect April also to get another rate cut. So RBI is doing its bit. Government expenditure is up. December capex was up 91% year on year. January 55% year on year. Still, we won't make the budget number on capex, but at least the momentum is strong going into the new year. So I think domestically we solved for a lot of the issues. It's more the global overhang of the Trump tariffs and the uncertainty he's brought into the equation, which is keeping Indian markets down right now. And I think a rotation out of US markets into emerging markets is starting, Nikunj.
The New Year which we celebrate in December, there's a New Year in Diwali, there's a Chinese New Year. आप कौन सा Happy New Year की बात कर रहे थे?
Financial year.
A financial year.
I didn't know that is also celebrated. You've been working a lot on your advanced taxes. I can see that. That's why I'm thinking about New Year's. Paid a lot of taxes this time. 15th.
Yeah, that is always a painful time to have to pay taxes. Nobody wants to.
So at least you're paying taxes, Ajay bhai. Think about it. Where are taxes for anybody? Nuresh, look at his face. I mean, I can tell you that he's not going to pay taxes this year, right, Nuresh?
Taxes are a problem. You have unrealized losses and realized profits this year.
Kunal, paying taxes? Advance tax 15th?
Doesn't look like.
Now I know which dinner you're talking about.
See, Nikunj, asset allocation is your only free lunch. So this year we have been blessing our fixed income parts of the asset allocation. That's all.
Okay. No, I mean, it's tax harvesting, advanced taxes. I mean, we don't normally talk about it, but for any individual, they are important components. I mean, if you have some income where even TDS gets cut, you'll have to think about advanced taxes. We'll maybe talk about it next week, that what is tax harvesting and what are some of those tricks which you need to know in case you really want to avoid taxes. Pay your taxes. I'm not saying don't pay your taxes, but where can you really avoid some taxes? Okay, Kunal, for those who want to pay some tax, they'll have to make money. Give us an idea in which somebody can make money and pay a tax.
So I think in terms of the short-term ideas, I would look at Manappuram Finance. That's a very, very interesting chart, because even if we look at it over the last 2 months where the markets have been extremely volatile, the stock has been into a different tangent altogether in its own zone. The stock trading about 200 plus mark. Currently, it's absorbed a major part of the market volatility. And I believe that even if we see maybe a week of more stability for the markets, we could expect Manappuram Finance to get into a breakout yet again.
It's not looking great actually. Nuresh, in this entire market rally, whether it's small or large, we've not seen the big boys participate. Nothing big in Adani Group, nothing big in Reliance. These are the names you want to see, or stocks you want to see charged up when you're convinced that markets are making a comeback.
So we are not seeing follow-up moves. So if you look at Reliance Industries, it broke below 1200, went to 1160, and then we went back to 1250 in 3 sessions. And now we are stuck around that 1250 mark. So what is happening is we are seeing 2-3 day moves, and then we just pause out, whether it is a breakdown or a breakout. So this is classical time-wise consolidation, which is going on. The range gets smaller, the volumes dry up. So this is where we are in, and we could spend quite a few weeks like this, it seems.
Okay, that's the take coming in on Reliance. Let's see how we're closing in for the week. And we've managed to hit a 2-week high, but we've closed in the red on a net basis, or rather closing in there, mainly dragged by IndusInd Bank. That, of course, turned out to be quite the key culprit. Even the mid-cap index was down about almost 1% this week. Vodafone Idea, AU Small Finance Bank, these were some of your key laggards in trade. And the small cap index fell about over 2.5% this week. IT had the worst week. It's an 8-month low that the Nifty IT index has clocked for itself. It's clearly been the top sectoral loser. Almost down about over 4%, dragged by L&T Tech, Wipro. These were some of the hard hit stocks. On the other hand, of course, Nifty Metal, that hit a 2-month high. But regardless, this week we're closing in the red. Energy as well, closing in the red, but it's a 3-week high regardless. And the Nifty Bank, largely dragged by IndusInd Bank solely, that of course managed to clock in a 9-month low. Ajay, not getting into specifics, of course, of IndusInd Bank in case you can't talk about it, but would you say that the selling is overdone with the day before's 27% fall?
Aisha, more, it's where the market is in the cycle. This kind of news would have got absorbed when you were on the upward momentum. Now markets are hating any uncertainty, anything which is unanticipated. So that is the issue. On a balance sheet this size, on a P&L of this size, you would say it's a minor blip, but the markets have chosen to react much strongly, much more stronger than what the management described it as. And we have to pay respect to the market sentiment. So I think it's more a question of where the markets are positioned rather than any particular bank. I don't think with the kind of supervisory audits that RBI has in place that there are major skeletons sitting in the Indian banking sector. I think that can be very strongly ruled out. The NPA situation is quite good. Microfinance is an issue, but that's an issue which is broadcast for nearly 1 year now. So it has got well digested in the pricing of the stock. So derivatives always, hardly anybody understands derivatives. So hopefully with this new exercise that RBI is doing where it's asking banks to disclose, we'll get an idea, but I think it's more the uncertainty. And banking remains our top sector. And within that, private sector banks remain quite favorite for us. I think as the bounce comes into India, you will see this sector really outperforming.
My point, Ajay, is for banks to do well, economy has to do well. And for economy to do well, earnings have to do well, consumption has to do well, government spending has to do well. For a sector which is a proxy on growth, why should one buy it when we are not confident about economic growth? And it's a logic which I'm asking everybody is that you buy banks when you want growth. You don't buy banks when growth is bad. But everyone is saying buy banks because you will make money.
No, and Nikunj, you know the answer. You have thrown a curveball at me, but overall, when nominal growth, even at these rates, you are at 9.2%. And going ahead, we are expecting double-digit nominal growth. Corporate earnings, we are expecting 12 to 14%. And then the base effect kicks in from June. June and September, you will get a fillip in the year-on-year numbers because these were very suppressed numbers in the present fiscal. So as the new fiscal year starts, you will get that base effect also. And banks are going to fund it. What you are enjoying right now is cleaned up bank balance sheets and cleaned up corporate balance sheets. There is a huge output gap because of the very restrictive fiscal and monetary policy. Monetary has started easing, but it takes 6 to 12 months to fully transmit into the economy. That's why we would prefer that in April, if it's a bigger rate cut, that will help the recovery to gain more momentum. But we don't see an issue with the Indian economy per se, and the banks will fund it. So that's the reason I think nearly the entire street is in a mood of putting banks as the favored sector for the recovery. And they will fund that in a very large economy. They will provide the growth capital. So it's a no-brainer, keeping a large portion of the portfolio in these banks.
Look at the bank Nifty and the Nifty, 1 year, 3 year, 5 year. I mean, don't go beyond 5 years. Data is not there. So this is 1 week, right? Let's look at not 1 week, 1 year, 3 year, 5 year. Then we can compare. 52-week change in the bank Nifty is 1%. It's not given any returns. Earnings have got compounded. That is important. Earnings are getting compounded. When earnings get compounded, stocks, they start becoming cheaper because then the P multiple starts changing or book value starts increasing because NPAs are not coming. So that's the 52-week change for the bank Nifty. Now from 2022, that's 3 years. 3 years is like once upon a time. It's like a proper cycle. 3 years and the bank Nifty, after COVID, after all that adjustment, remonetization and all that, the bank Nifty is giving you a 23% return. But in 3 years, the Nifty has given you, let's look at it, and then I'll throw this at Kunal and Nuresh. That's the Nifty 50. And let's look at the bank Nifty, please, 3 years. It's not much of an underperformance, right? Halla kyun mach raha hai? 23% for Nifty in 3 years. 3 years, right? Just check the data again.
Yeah.
23% is what Nifty is giving you. Aisa, 23%, that's it. 3 years. I mean, now we are going lower than fixed income, frankly, think about it, right? That's the time mean reversion kicks in. I mean, that's the time you say that's time to, once you go below the mean, you buy it because you go back to the mean.
But 23% would be at par with US. Because world markets also have done very well in the same time period, right?
I'm not sure of the exact return.
One of the best returns.
Yeah.
No, Nasdaq must have given better returns. No, 23% is nothing, Aisha. 3 year return, 23%.
Yeah, but it's still best in the world.
No, it will not be. I mean, Nasdaq
at par at least. With US maybe.
I think other indexes have done well.
Oh,
you compare with Nasdaq. No, I mean, let's look at it this way. And Ajay, you may want to pay attention here because I'm just trying to discuss the theorem here. Ajay, 23% in 3 years for Nifty, which means that on a compounding, this is not even a return of what, 8%, right? Now 8%,
6.5%.
6.5%. 6.5 means that you're way above the averages, way below the averages. Average is 12,
Yeah.
which means that mathematically speaking, in next 3 years, if you have to come back to the average, that means next 2 or 3 years would be double-digit mid-teen returns.
It should be. If the market chooses
Simple,
to mean
no?
revert now, or is it a period like 92 to 2002 when 10 years you went nowhere, or is it like 2008 to 2013 where it went nowhere? Then it could be 5 years also, Nikunj.
The data news, oh my God, so much so for this bull market, and and large cap stocks have not even fallen. Let's look at the small cap index actually last 3 years and the mid cap index. I mean, it's nice to talk about some numbers. I don't have my Bloomberg burning. I would have done it internally. And there you go, last 3 years, the return in the small cap index is 32%. And in the mid cap index, let's look at the return. 58%. So just tells you that where the real, J curve in the market has happened.
Yeah.
Another interesting data is that I was looking at the breakup of the SIP flows. And the SIP flows in the small and the mid cap funds in last 1 month, which is the breakup of the data, in this market fall, the small and the mid cap contribution has gone higher. So Indians have invested and increased their SIPs in small and mid cap stocks. Right or wrong, I'm not getting there. All I'm saying, data is data. So Ajay, what's next now? Mid cap will underperform, large cap will outperform. Everyone is saying that. I can assume that you will also say that?
I frankly think if you are going for growth, the mid caps will outperform. Small caps becomes an issue of survivability, and we have seen pretty strong cuts coming in. So it is cyclical. When the economic cycle turns faster, we are not in a slowdown or anything. We're still growing 9.5% nominal, which is pretty good on a global basis. We'll not get out of poverty or low income trap at this. So that is the big issue for India. But the 10% of India which is doing well is reaping the benefit. So I would say mid cap will probably outperform still. And Nifty will be on a catch-up mode. But when that catch-up starts, I would be very wary of putting that. But what I gave you the factors, I think both monetary policy wise as well as the support from the fiscal, both have now turned around. And from here on, we should see a stronger economy. And now, whether it is 6 going to 6.5 or we finally breaking through 7 again, difficult to say. But it will happen. It's a matter of whether it's 6 months or 12 months, but it's coming. Private capex will still take time. That is not coming back in a rush because you have a big output gap in the economy. So we are not using the entire capacity already. So, but having said that, there could be some policy changes which could help. Nandan Nilankani made a very nice presentation yesterday at one of the VC conferences in Bangalore. And, things like that, if they come in, if the amount of ease of doing business, any changes made there, that can unleash a lot more of the animal spirits. But I would say still mid caps will outperform, then Nifty and then small cap in that order for the next 2 years.
Let's get some thoughts on this whole debate of large cap is now way below its mean. It has to revert back to mean, which means that if it has to revert back to the mean, which is 12 to 13%, that means in next 3 years, you definitely will get 2 years, or maybe you will get 1 big year, 1 flat year, and 1 okay year. But gains in excess of 15-18% are coming now.
So if you look at large caps have underperformed in the last 2 years, but overall, it is the banking which has underperformed the most post-COVID. So from 2009 to 2020, banks always outperformed Nifty over a period of 3-5 years. So the big catch-up, if it has to happen over the medium to long term, it has to be banking space, which for the last 5-6 years has not caught up.
Okay. So 8 minutes left, and we are studying a market which in last 20 minutes actually we just gone from 3 year to 30 minutes. In last 30 minutes the market has gone done nothing. just minor uptick from the day's low, and that's about it. It's a very, very ordinary kind of and stuff. Kunal, we've discussed, I think, L&T quite a lot, right? And every time we've discussed it, somehow it stops moving after that.
Yeah.
It's just a coincidence, right?
Yeah, so our discussion is that the stock has not been moving in the last few weeks. And that's what it is for L&T. But the only good part about L&T is that it's been a better performer as compared to the peers in this leg of sell-off, because at a point where ABB, Siemens, etc., I think these stocks have fallen almost 40% from their 6 month, 7 month or 9 month highs for themselves. L&T has been one of the stocks which has fallen just about some 20-25% broadly. And even the pace of sell-off has not been very consistent for L&T. The stock goes into a correction, then pauses for at least 4-5 weeks, and then if the sell-off aggravates for the overall market, that's where you've seen L&T also taking the sell-off or downtrend further. But right now, I would believe that the stock so far is into a consolidative mode. 3100 seems to be a good support for L&T so far.
Yeah, quite surprising actually the way L&T has moved, considering this is the one large cap sector leader to really bet on, but it's been really stuck doing nothing practically for the last 1 month. In the last 3 months, of course, it's fallen about 18% or so. But Debashish Panda, he's ready to bid adieu to IRDAI. He's going to be completing his 3-year tenure. Who are the top contenders for the IRDAI chief? I've got Anurag Shah, my colleague here, with the exclusive details on what he's picking up. Anurag?
So, present IRDA chief Debashish Panda is completing his tenure and he will be demitting office today evening. So his tenure was eventful, lot of big initiative taken by Debashish Panda, but on 6th of March, Finance Ministry has invited application for next IRDA chief, and what we are picking up from our sources that there are 3 top contenders for next IRDA chairmanship, and the first name is Sriram Taranikanti. He is currently director at Lal Bahadur Shastri National Academy. He is an IS officer. He has been executive director for 5 years from 2011 to 2016 at IRDA, and is studied from BTech from IIT Madras. Second contender as per our sources is Girdhar Armane, former Defence Secretary, former Road Transport and Highway Secretary. He was also part of IRDA for deputation for 3 years as an executive director for in-charge inspections. He has also studied in IIT Madras, MTech. And the third name, what we are picking up from sources, is Ajay Seth, the current Revenue Secretary and Department of Economic Affairs Secretary. So these are the 3 contenders what we are picking up from the sources. Still there is a time to apply for the till 7th of April. Government has invited to apply for the post of new IRDA chief.
Thank you. IRDA is going to soon have a new chief, but right now we've got 5 minutes left, and then we break out for a long weekend. And if you're a trader, well, there's an expiry and nobody's looking at trading long positions because you don't know what could happen. I mean, 3 years is like a decade with Donald Trump as the president.
Yeah.
Right?
It's a century.
So, you don't know that what will happen on Friday, and forget by the time when you come back, you don't know what is coming on Monday.
Yeah, absolutely.
So nobody should actually, hand on a heart, trader should not take positions.
Yeah, they should be absolutely as light as possible.
Yeah. Ajay, 3 days we are going away. You don't know when we will come back. What will happen on Monday morning?
Yeah, absolutely. If you see yesterday, the CPI number came low in the US. The market stock futures started going up in the US, opened up. Then all of a sudden markets decided, no, I'm still nervous on the tariffs. And then by the end, there was another, pull up in the market. So, yesterday was still a day where Trump only did the long interview along with the Irish Prime Minister. You were really hand in your mouth waiting, when will he explode and when will something happen? And luckily it went off quite pleasantly. But, morning you say 50% tariffs, evening you say 25% tariff, next morning you change your position again. Markets can't handle that uncertainty. So people are saying we'll wait it out. US money market funds have crossed $7 trillion in AUMs. Even 5 was a big thing by 2023. A lot of the incremental money was not going into debt, but rather going into money markets where you were making 4.5% virtually risk-free in dollar terms. And now again, we are seeing that money rushing in there, even though 1% rate cuts have been done by the Fed. Still money is going into the money market funds, which have crossed $7 trillion.
It's so good having you on the show, Kunal. Naresh, we'll let you guys go on that note as well. Wish all our viewers, of course, a very happy Holi from all of us. May Monday be peaceful, as would be your, as hopefully should be your long weekend as well. But I'm going to hand it over to Ashesha for the closing trades.
Ending lower for the week and for the day. Nifty near that 22,400 mark, 75 points lower on the Nifty. Nifty Bank, of course, was the outperformer for the second day in the row. Nifty Bank also, in fact, has slipped into the red at the close of trade. 48,050 is where the Nifty Bank is currently trading. In terms of individual stocks within the banking sector, we had Bank of Baroda, which was gaining in trade up nearly 1.5%. Nifty Mid Cap Index also for you on your screens down 0.8%. Bank of Baroda up 1.5%. We had SBI and ICICI Bank within the banking sector, which were gaining in trade today. On the losing side, though, real estate stocks were under pressure today. Nifty Realty Index was the biggest sectoral loser. And within real estate sector, we had Brigade Enterprises, which was down nearly 3%. Godrej Properties and Phoenix Mills were some of the other losers from the real estate sector. Apart from that, auto stocks were also reeling under pressure today. Bharat Forge, Motherson Sumi, Exide, all of them falling anywhere between 2 to 4% in trade today. On the gaining side, though, we had PSU banking stocks. We spoke about Bank of Baroda, but SBI and Punjab National Bank were some of the other gainers from the PSU banking index. In terms of individual stock-specific movers, we had Bharat Electronics on the back of that order win that came through, where the company said that they won orders worth about 2,500 crores. That one ending the day 1.2% higher. BEML, after they signed an MOU with Siemens, was ending the day with gains, with marginal amount of gains, 2.5% higher on that one as well. MTNL, this stock was up 12% on the back of the story that came in with respect to privatization, and government and MTNL have also earned some money from monetization of fund. MTNL ending the day at 48.1, 11% higher on this stock. Adani Green on the back of Macquarie report was also gaining in trade today. So yes, a whole host of individual stocks that were in focus, but on the index level, we are ending the day with the cuts, not only for the week, but for Friday's trading session as well. Nifty ending 90 points lower near that 22,380 odd mark. That's all the time we have on this edition of the show. We'll see you again on Monday. Till then, happy Holi to all our viewers.